So, do you want to know when the Fed's going to pull back on interest rates and send the markets flying? Well, you came to the right place. In today's video, we're going to be analyzing the Fed pivot and when the Federal Reserve is going to cut interest rates. Now, whether you're living on your own, renting, staying in your parents' basement, maybe you're an investment real estate entrepreneur, this is going to affect you and all of the financial markets, whether you're on Section 8, doesn't even matter. It's going to affect the markets like stocks, bonds, even housing, your auto loans, credit cards. I mean, this is going to affect the entire economy. They're already saying that the roaring job market could mess with the Fed's plans. And the next CPI or inflation report could surprise a lot of investors and the market. We're going to be paying very, very close attention to prices on a daily and weekly basis. Now, I have noticed that food is still high, if not higher. Gas did drop a little bit down to around $3.53 per gallon, at least at a local gas station near me, but California's gone back up to $4.40 in a matter of weeks. These signs point to inflation going back up again, and next month isn't looking all that good either. Have you guys noticed the prices in your area? Drop me a quick comment down below. Also, if you own a home, make sure your home is protected. Get your free home warranty quote. It only takes like 15 seconds. Link in the description down below. All right, guys, here's Fed Chair Jerome Powell talking about the last interest rate hike.
Today, the FOMC raised our policy interest rate by 25 basis points. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments.
What do you guys think? So yeah, the Federal Reserve is in risk management mode, and it seems as if they're more worried about the possibility that they're not going to be doing enough to squash inflation. And in the background, the job market actually looks like it's doing all right for the most part. Depends on what industry you're in. Now, on the surface, that is, especially the job market, it's proving surprisingly resilient. Fed officials have envisioned raising interest rates well above 5% this year, while the markets have priced in rate cuts later in 2023. But another possibility is that maybe they're both wrong and the terminal rate will be even higher than even the Fed or the markets are projecting. That would mean a very serious crash in the markets. And I'm talking about everything from stocks to crypto, the real estate market, thanks to recession fears and an economic ripple effect that we haven't seen in decades. The problem? Most traders are jumping on the smaller than before rate hike and riding it for all it's worth in the market. But if you really listen closely to what Jerome Powell had to say, you're more likely to believe that all of this recent market rally is probably what they call the dead cat bounce. This is generally what happens that precedes a serious stock market crash. Like Jerome Powell said, quote, "It's still very difficult to manage the risk of doing too little and finding out in 6 or 12 months that we actually were close but didn't get the job done. Inflation springs back and we have to go back in," end quote. Now, according to him, quote, "It would be very premature to declare victory or to think that we've really got this," end quote. Now, if you're Jerome Powell, a world where there are a few bumpy quarters for growth or a mild recession in the second half of 2023, that's considered tolerable. Inflation staying high is not. That's why many of my finance friends believe that we are definitely going through a dead cat bounce for both stocks and crypto. Most of the jobs added were in the service industry, low paying and part-time, and those are being filled by Americans needing a second or third job. Long, bumpy road ahead, guys. But if you have the right mindset and the right investments, including gold, you can weather the storm. Now, if you're interested in investing in gold, there is a link in the description down below for the best way to invest in gold. But that's just one of many assets that I would definitely want to have in my portfolio. Now, as for the Fed pivot, it helps if you look at it in 3 stages. So stage 1, that's when the Fed decelerates and slows down the pace of interest rate increases. And we are currently in stage 1. That's where we are right now, guys. Now, if you remember, the Federal Reserve was raising interest rates by 0.75 at each one of their meetings. Then in their December 14th meeting, they slowed things down to 0.5%. And you just heard the most recent one, they slowed it down even further to 0.25%. Now the Federal Reserve has signaled that they're going to raise interest rates 2 more times. One more time in March 22nd by 0.25%. And the last one may be on May 3rd by, again, 0.25%. So 2 more increases in March and May. But that's still a pretty big but. The markets and the majority of investors, they don't believe that. Instead, they predict that the March 22nd rate hike is probably going to be the last one. So the market is basically calling the Fed's bluff and saying that the Fed is probably going to stop the buck at 5.0 terminal rate. But really, the ultimate big picture is that the Fed is going to stop with interest rate hikes pretty soon. That will mark the end of the Fed pivot stage 1. Stage 2, the Fed rate hike pause and see. Simple enough, right? The Fed will pause the rate hikes and enter a wait and see kind of mode. These interest rate hikes, they take time to work their way through the market and the economy, so we're still actually not sure about the full impact of the totality of the Fed rate hikes. This we'll see in the Fed June and July meetings, where they'll probably say something along the lines of, we're maintaining the interest rates, no increases, no cuts. We're just going to maintain interest rates at restrictive levels to ensure that we slay the beast of inflation. They're going to say that their decisions will be data dependent and they're reviewing the data. That's pretty much the gist of stage 2, the wait and see. After that is stage 3. The Fed will start cutting interest rates. Markets expect this to happen either September 20th or up to December 13th at the latest. The Fed is saying that's not going to happen though. They will not cut interest rates in 2023 is what they're saying. Now, of course, you can see the two sides of the argument here. So let me go ahead and present them for you. So the first camp is for people who are in the market saying that the high interest rate environment is going to hurt the economy. Now, we've already seen it take the effects and start to hurt the real estate markets, but later it'll trickle into other sectors of the economy, most especially jobs and layoffs. By then, it may be too late with layoffs, bankruptcies, and other higher unemployment all piling on top of one another and ultimately slowing the GDP to recession levels. That's where the Fed is going to have to come in and start cutting interest rates in 2023. Now, as the economy weakens, it'll kill demand, and yes, inflation will absolutely come down, and the Federal Reserve can declare victory and they can play hero. Basically, they're going to win the fight against inflation from a self-induced recession. So that's the argument for the Fed cutting interest rates on the tail end of 2023. Now, on the other hand, you have this camp where the Fed is coming from where they're saying that they're not going to cut interest rates in 2023. This is how they see it going down. The Fed believes that we will have a soft landing. So yes, the economy will slow, but the labor market is going to see us through and ultimately prevent the economy from falling into a recession and an ultimate economic collapse. Basically, this is the Fed acknowledging that we have a tight labor market, but that we're hoping that companies will not resort to layoffs and instead just reduce the job openings. With that being said, though, the strong labor market will prevent recession and there will be no need to cut interest rates in 2023. Now, while all of this stuff is happening in the background, the Fed hopes that inflation will continue to fall to about 3% inflation by the end of this year and about 2% inflation by the end of next year. So basically, the strength of the U.S. consumer and a strong job market will prevail, according to the Fed. Now, I honestly have friends on both sides of the debate here. There are those who are willing to wait through all this volatile state of the market and make their choices when they feel that it's right instead of letting others put them into an emotional panic. Let me know how you guys see it, because right now the market is split. In fact, some investors believe that the new bull market has already started in stocks and in the crypto space. These are the same people that believe that the worst is already behind us and that we've already bottomed out. No recession, soft landing through and through. Then again, I know a lot of us are still feeling the sting of inflation whenever we go to our local Walmart or Kroger's. I mean, am I right? We may not be off the inflation hook that easily. Pretty soon, the markets are going to react to inflation going down at a much slower pace. That's when the market is probably going to realize that we're in a dead cat bounce and panic. It's kind of like being in the gym. Losing your first few pounds is probably going to be the easiest part. Then, after some time, the efforts to get another pound off of your body starts becoming increasingly more and more difficult, and it becomes a little bit more stubborn. Now, compare that to the inflation rate going down. Jerome Powell said that the service inflation and housing is not coming down. We still have a tight labor market. And guess what? Energy prices and commodity prices, they're rebounding. I think what's important to remember here is that the Federal Reserve controls the economy. They control the stock market. They control the bond market when they print money. You don't fight them when they tighten, because that's a losing battle. The S&P 500, it's at about 4,000 now. Let's see when it reaches 3,600, then we'll talk about it again. Definitely something to think about here. At the very least, I recommend getting some additional income streams going. Diversify your assets. Maybe invest in gold. Look into side hustles and small businesses that are right for you. Now, of course, Comment section is wide open for your requests, for your suggestions, for future content. But there you go, guys. Another jam-packed financial freedom update and daily news report. The Fed pivot in 3 stages and the different sizes of the market right now. Plus my own take on what's coming for you guys and for your money. When I say you guys, I mean me too. Anyway, it's always a good one when it comes to our channel, guys. So always make sure you tune in for the latest one. Keep the subscribe button lit, notification bells on, be kind to one another, and I'll see you on the next video.